May profits be upon you. How are you doing? Okay, let's take a look at the US NASDAQ 100. The NAS 100. Okay, we're going to do a little top down analysis here. Um, I don't think we need to go higher than the daily, because we can clearly see that it is in a downtrend. All right, with structures being broke to the downside, pullbacks, structure being broke, pull back a little lower low. Oh, we got a high now. Look at that. And then we break that low. All right. It's just lower lows, lower highs, lower lows. That's the way I like to see it when the price action is clear, right? Now, something else we want to notice here. This is making higher highs, higher lows, higher highs, higher lows, higher high, right? But this is not our trading range, all right? This is our current trading range, and we are trading within it. That makes this a break of structure to the downside, making this bearish, making the market bearish, right? And then we have this internal, because it's inside the trading range, we have this internal kind of uptrend going on. All right. Now here's the secret. Here's the secret how to interpret this stuff, right? How to look at structure. Until it breaks this high, we are still bearish. We are still bearish. All right. Once it breaks this high, does one of these numbers. As soon as it breaks this high, we are bullish. Do you understand? Technically, we are bullish. And then structure, all we need is two uh, higher highs and two higher highs and two higher lows, and you have an uptrend. All right. So as long as price, sorry, as long as price stays below this line, below that high, we're still bearish. And if we divide the trading range in half, the upper range is premium prices, the bottom range is discount prices. We want to take shorts from premium prices. All right. And if you want to use your Fibonacci tool, Fibonacci retracement tool, from top to bottom, from the swing high to the swing low, right? You'll see 50% come through the middle here, and we are well within premium prices. And I am looking for price to set up a sell position. Now, I hope you remember that. Hope you remember that lesson. All right, let's go to the 4 hour. On the 4 hour, we can still see the bearish trend, right, of the higher time frames. But we're gonna come in a little closer here and examine this 4 hour uptrend, right? All right. We're still bearish in the higher time frames, and we're still looking at this high and this low as the trading range. All right. But on the 4 hour time frame, we're looking at market structure here. All right. And we're coming up to an area where I think we may be setting up for a very nice short position. Watch this. All right. Let's mark the supply zone that prices has traded into already right here. This is the way I would mark it, from this high to this bullish candle's low right here. Boom. That's it. That's it. Easy peasy, lemon squeezy. And we're coming all the way over here. Now, what I like about this is that we're building a supply chain, a chain of supply. here is the new supply from that high to the low of this bullish candle here, where the buying goes. We buy it up, and then we have the aggressive sell-off where uh, that price intersects with the low of the bullish candles, where the start of the buy up starts. That is where I would mark the range of this supplies. Okay, now what do I like? What do I like about this? One, there was a sweep of liquidity to take to make the high, to take that high out. We sweat liquidity, and that's a good thing to mark. All right, because I with a supply zone, I look for the same thing, the opposite side when I look for demand zones. This validates the creation of a supply zone in my book that checks that box. Two, when it came down, when it started the aggressive sell off, it left an imbalance. All right. I love to see imbalances when the doggone uh, zones are created. All right. That imbalance. Some people call it a fair value gap. It will get filled at some point. Prices already filled most of it. All right. The fair value gap ends up here. Okay. Uh, Also, we broke we broke uh, internal structure. We broke internal structure here. All right. Again, I already explained why I call it internal structure, because it's inside the larger trading range. But on this time frame, on the 4 hour time frame, this is a break of structure. Okay. And I like the fact that uh, this high was taken out. All right. This is what I like to see right there, because this low is responsible for that high. All right. Price pulled back, came up higher, and then we came crashing down. Great, great stuff. All right. You might notice that I have a line, have my break of structure line going through this candle wick. All right. It's coming to, I need to see a body close below this line in order for me to say it is a break of structure. If it just wicks down and comes back up, then it was a liquidity grab. All right. I'll go into more of that in a different video, but what we can see is price is demonstrating with that break of structure that it wants to go down. The intention is to go further down. Now, once we get a break of structure, and uh, we have another break here. All right. Once we get a break of structure, I like to see. I expect price to come back, and this is where we'll be waiting at this supply zone. And what am I looking for? I'm waiting for price to come back on up here, take out this zone, this point of liquidity here, because this looks like inducement. What is inducement? This is a point where people, traders, will take sells early, only to have market makers come back up and zap them out of the trade and take the stop loss, and they become liquidity. All right. Get you in early, then they get you in profit and you're happy, and then they come back and zap you right out of it. Okay. I always look for that under a zone or above a zone, an inducement point, a liquidity point, because what you want to see is price has trading, when it's trading into a zone, there is liquidity going in and liquidity going out. Got it? All right. So this is where I'm looking. All right. And I'm going to put up my grid on this, and this is what I want to see. I'm hoping that you can follow. Boom. A higher high, a break below this this pullback low, and then a return to impulse somewhere in this leg of structure here. That's the impulse leg. I need price to pull back to a zone of, you know, supply, which will probably be somewhere around here, right? And then we could take a very high probability trade to the downside. I got it going up to the middle of this zone. So we'll see. It could very well be one of these kind of things. It just touch and go. Boom, boom. Right? It could. I'm looking for bearish, in general, bearish price action. Once price meets this POI, I'm going to put an alert here. And that'll alert me that price has reached our POI. And I'll be looking for bearish price action. And I think this will be a great trade. This will be my TP1, and I'm hoping it gets down to this area here. All right. Where am I taking it to? I'm taking it to the next train station, the next zone of demand. All right. If it gets through that zone, I'll be looking at this as the next stop. Here, TP1, TP2, whatever you want to do. All right. It could be your ultimate TP. Doesn't matter. You do your thing. This is a lot of pips. This is a lot of pips. This is even more, but just making it down here would be great if we can get this kind of price action. Boom. And we get rounded over here and then down. All right. Something I want you to bear in mind. Tomorrow is FOMC. Thursday, the following day, is GDP numbers. That's gonna be some funky stuff. All right. What I expect up until FOMP, up until FOMC, all right, when the Fed comes out with the interest rates, all right, which should be, is expected to be 3%, 3/4 of a percentage point, all right, rate hike. That is going to strengthen the U.S. dollar, and that's going to bring the markets down. All right, I expect price to trade up into these areas, up higher, up until the news, because the big banks are going to want to get discount prices on their shorts. Do you understand? Yeah. See it happen all the time. Doesn't mean it's going to happen tomorrow, but I think there's a fair chance that that'll be the way things work. All right. Now, if we should break this zone, just in case, if we should break this zone, there's another zone up here. I'll be looking at it like that. All right. So it may use this as inducement to go higher. We don't know. We don't know. But I'm just giving you something to bear in mind that that might happen. That price may trade higher. All right, we may not get as high as this, but I like the way this is formed, and I'm thinking that we have a good shot of rounding over here and then coming for this low side, this the what do you call it? Sell side liquidity. I'm sorry. Okay, because this would be, remember, the bigger the higher time frame uh, structure is lower low, lower high, lower low, and we, as long as we don't break this, remember we're still bearish. So I'm looking at this point as being the optimal place in premium price as opposed to discount price. Remember the 50%. I believe this would be a nice place to catch a short. I hope that makes sense to you. If it does, leave me a comment, smash the like button, all right, and do subscribe to my channel. I put out a similar uh, analysis for the US 30, the Dow, all right, similar, very similar, and you can check out my YouTube channel for that. Okay. I will see you in the next video. Thank you for watching. Do not forget to smash that like button because that helps the algorithm on this on TradingView. And I want to also want to make sure that you subscribe to the channel. Okay. I'm looking for subscribers. I'm looking for a community of traders that want to raise their game. All right. I'll see you in the next video.